and then look at that trend continuation. So what we see here is the trend continuation, and in why, here's, back to what I was talking to you about a little bit ago. Look at these multiple bars closing below the 50% level, but in particular, I noted that, these ones had lower volume too. So basically, it was just an absence of selling, okay? Um, and then what we have happen here, and you see we kind of got railroad tracks going, got some air between the two speed lines. But overall, look at this, gang. This time in the morning now, it's about 11:45 Eastern time. This is my time, Central time here. It's about 11:45 Eastern time, okay? And you've got this absence of selling here, but you've got, other than that, you've got rising MACDs across the boards, and you retrended with and had an absence of selling. Okay, and as I mentioned earlier, you guys will actually recall I specifically called out a doji star earlier in my examples to you guys because that's important. All right, and yes, this was kicked off, Lou. You're absolutely correctly. It's too early to trade it here. It's too early to trade it here, but it was kicked off with a key reversal up back in the direction of the trend. So Lou, gold star to you for going in and identifying that, especially with your full-time work and everything else. It's great. It's great that you remember that. So nice work. Key reversal up, kicking it off. While it's pushing back up here. All right. And if any of you guys identify some of those things that I've taught, now you can start seeing what we're talking about. I'm putting a lot of things together that I've taught over the course of months, and that's what's going to happen in the future too. I'm going to show additional things, but I think that this is one of my favorites, and I'm certainly going to be focusing on this a lot for my trading as we go into the last several months of this year. So trying to share a couple of I said these different examples with you. All right, so. The next thing to go ahead and note here is, well, let's go ahead and actually what I'm going to do is I'm going to flip to the next slide. You guys did a good job in identifying this, okay? So give me just a moment and we'll flip to the next one. Okay. So I like that, Tom and Lou and Ian and Byron, all you guys, every one of you that was, posting up here, keep contributing. I got, what, 65 people between here and the webinar, so, posting information. So, keep it up. Let's see those answers. All right. And hey, Bill, sure, we can talk about that later. Be happy to help you. I'm guessing you might have Firefox or something. Try it with Internet Explorer if you have Firefox, Bill. So okay, what I want to do now, let's go ahead and show this next slide here. And I know I kind of go ahead and point out some things, and you kind of see where I'm highlighting things, but I'd like to go ahead and see if people got some comments. They can see what they observe about this, what they're seeing here. So what do people see on this chart? Oh, and by the way, I don't mean to trip you guys up too much, but there's going to be a couple of these slides I'm mixing in along the way that will go ahead and actually be examples of things that are high risk to trade. So I want to put that out there now. I'll let you know. Okay, Ian talks about continuous higher closes. Any other comments? Okay, I see the Swiss cheese, which of course the Swiss cheese is when we have the price crossing back and forth on moving averages. Finally, the bar up 50% previous bar, and the moves higher in volume. Okay, divergence between RSI between 5 and 15. All right, let me go ahead. Thank you guys for your answers here. I want to go ahead and share a couple things with you. And this is why, there we go, trend continuation. There you go, okay. Trend continuation is also very key here, Nathan, because of the fact that, look at the hourly chart, okay. Look at the hourly chart rising here. Again, look at this above the RSI, okay. The 30-minute, okay, above the zero line, what I call the zero line. Of course, it's a 50 level, but I call it the zero or neutral line. All right, so on the more macro level, we had the hourly going our way, okay? So then we had short-term chop in this market, and then it turned around, and notice the speed lines come almost precisely, and you'll see this happen a lot. You'll see speed lines pull back. That's absolutely right, Jeff. Nice work. It pulled back right to my support where you found higher volume. It closed up. So what is this? A sign of accumulation. Then the speed lines roll back up again. Okay, and look at the MACD as that started to happen. So you basically had a dip in the 5-minute chart that started to reverse itself. Okay, now I just wanted to point that out there where you start to see it transitioning. Overall, I think better places to enter this, and what you'll see me do, is entering more likely over in this area, okay? Particularly here again, you see now like the Doji Star right there on low volume. As I've told you, that's one of those things I really like to see, okay? But nonetheless, look at the macro trends. And so basically, and that's why I said, these hourlies can be very important. I've been prepping you guys on that for weeks and weeks, haven't I? I've been trying to get you guys to focus on that hourly chart. Some people are so focused on their 1-minute and 5-minute charts, they don't pull their heads, out far enough to, see the trees in the forest. So, and Stu has commented here that he recalls, I've been trying to get people to focus on these hourly charts, okay? They're important, even if you're looking at like the 5-minute chart. They're going to be even more important, I suppose, for those of you that are looking at these 30-minute charts, but they're really important to the 5-minute player as well, because what we're trying to do with this, we're trying to be trend traders here, so I'm looking for resumptions of the trend, okay? So let's go ahead and move on to the next example. Okay, who can tell me what they see here? And this should be a familiar chart to you, because I actually demonstrated this to you guys last week. I showed this. This was a pre-hour setup, okay? And so I actually, when I mentioned this one in morning commentary, I said, hey guys, just so you know, I'm going to be talking about this next week, but this is a setup that I like. Okay, so I actually reviewed this with you guys last week. Trying to see if anybody can remember what I shared about this. Anybody see anything? That's right. Rick, that's very correct. There was a break and a pullback on very light volume. There you go, David. That's what I'm looking for as well. Okay, I told you, fish hooks and crooked fingers. For those of you that I was teaching these things to, even late last year in those webinars there, and then we're wondering why we weren't using them so much earlier this year when we had the higher volatility. I said what did I say to you at that time? I said they will become important again. No, not Jerry, there's not a crooked finger. There's a fish hook here. There's a fish hook right there. That's what I'm talking about. So, but for those that I was teaching you last year, when we did the four-part webinar series that's on my website, when we opened up the live trading room earlier this year and we didn't do as many of the crooked finger and fish hooks, I said they will become important, just not yet. Okay? So, as I've said, I've got many years worth of things to share, and there's just a right time and right place for each of the different things, and there's still plenty more to come. So that's correct. We have a fish hook, we have the breakout, a light volume pullback to the speed lines, which are starting to railroad cross. Also note, look at the direction of the trend once again. Okay. The hourly, the 30-minute, the 15-minute, okay? And this one was actually more of a contraction at this time, but the 5-minute certainly was very much up. The hourly 20 period, which was very important, as I keep saying, was up. So we started to push back into a direction of a trend here. So this is a setup that I actually like. Is it a big money maker? No. Pre-hours trades sometimes will be money makers, sometimes they won't. Okay. So that's something to go ahead and keep in mind there. Okay, Scott's got a great question. Negative divergence on the 5-minute far right and 15. Okay, yeah. Scott, you're absolutely right. Now, negative divergences, okay, just like volume bars, okay, what do those signs mean that we should be doing? When you see negative divergences, when you see high volume coming in, like here, if you've got high volume coming in on your trade, so you're going long and high volume comes in, what should you be thinking about doing? Very good. Here, let me just post this up because I appreciate the quality of some of these responses. It's exactly what I'm looking at doing. Looking for an exit, thinking about a possible reversal. I'm going to want to tighten my stops, okay? Just like yesterday, I started to go ahead and scale out of my trade and then move my stop up. So, very good. Nice to see some of you guys are observing that then. So you take what the market gives, and once it gives warning signs, then you go ahead and look at getting tighter and starting to slow down on the position, exit the position. That's what I do. So nice work. Okay. So let's go ahead and move on to the next example here. Yeah, I guess this is kind of a tough day to, like I said, for those of you that are kind of splitting your time there, I talked about this day looking to be a big up day there, looking for, said that you're long until you're wrong today is what I've been saying. Sure enough, we do continue to rally on this trade. But I had to get this presentation out, at some point here, and so today's the day. So I need to stick with that. And for those of you that are splitting attention, try to learn as much of this as you can here, and then we'll catch up with questions, tomorrow if you have any additional ones there. So, but this has been a much anticipated discussion, so I have to get through this today. Okay, so let me go ahead and pull up the next chart. Okay, what do we see here, gang? Oh, well, hold on a second. Now you might see it. Try it again. That was a test. It wasn't actually, but it was funny for a moment. Okay, what do we see, gang? Okay. Lots of answers here. And for all of you that mentioned that, yeah, we went from higher volume. We continued on. First of all, it was like a trend continuation here. As you can see, everything was temporarily coming down. The speed lines roll back up. Okay. Now, why didn't I like it here? Why didn't I like this here? Why wouldn't I have traded this awesome trade right back here? I had a fish hook. So why wouldn't I like this? Exactly. Exactly. The answer is lots of resistance, and that's exactly right. Okay? So what we need to do is go ahead and keep in mind that you can't just get rising MACD. You can't just get a fish hook, okay? And I recognize that it went up, okay? I totally get it. I totally understand that, all right? So I'm sure there's somebody thinking, but Rob, it went up. It was great. It was perfect. You had the speed lines going up. They reversed back up. When you're at these resistance levels like this, okay, I go ahead, I like to wait till they break the resistance. Okay, that's how I play it. Okay, yeah, this second bar was on lower volume, but Weiling, remember what I said? For me personally, I'm not going to wait till the picture perfect setup of first bar on high volume, second bar on even higher volume, third bar on light volume. In this volatile market, you're not going to get that setup nearly as much as the other ones. This is more normal. You're going to get a volume bar that deviates from the plan, even though everything else is check, check, check. Okay? Everything else was fantastic here for the most part. Okay? Minus like the volume here. Now the hourly could have been better off too. When it was the volume was basically sideways, and I wanted to go ahead and explain that because the volume. Remember what I've said in the last couple of weeks. I've talked to you about hourly volume. At a minimum, you want hourly volume to go ahead and be sideways or in your direction. Okay, you guys remember me talking about that? I said that's going to be slightly different than like some like the thrust pullback thrust trades where you really want everything in your direction. This trade, you really want the hourlies basically sideways or in your direction. Okay, for the conservative trader, you really would ideally want that in your direction. I know I wrote on my list there, I said, for the conservative trader, it's just not moving against you, and that's true. But also to add even more to that, if you're really conservative, you really want that hourly to really be in a solid uptrend, which here it's not, but I'm not requiring that for my trading, okay? So I'm trying to distinguish a little bit between regular people's trading, or sorry, my trading versus, say, somebody who wants to be really conservative on their entries, okay? So, nonetheless, we had the, 2 bars, a light volume pullback. Alan, you really don't want that. If the 15-minute is actually going against you, Alan, then you got to wonder how strong of a trend are you in. So at a minimum, you really kind of want the 15 showing that it's working its way back into your direction, which in this case, notice the speed lines had actually turned up. Let me actually, yeah, I'm just zooming it in a little bit here, gang. Notice that the speed lines actually did turn up, and by the time this bar opened up, it actually started getting a little bit of a hook back in there. But we had the big up bar and a tight second bar on the pullback here as well. So I saw the 15 given a fish hook setup as well. So that was good to see. Okay. Okay, Marcus. Marcus, you're over in Australia, as I recall. So get some rest, and we will look forward to seeing you tomorrow. Then. So have a great day, Marcus. Good night in Australia. And Alan, you're very welcome, because that's why I wanted to point out these different. In fact, there's the fish hook. See it? There's the fish hook, Alan, right there. So you see how these things all come together. I told you guys the fish hooks and the crooked fingers and stuff like that would become important later in the year. I told you that earlier in this year, and now you can see that happening. Okay, a lot of the things I've shared with you have come absolutely true, and so I can't emphasize that enough. Let's go ahead and move on to the next example. Okay, now I actually used this. This is the same shot that you took the last time, but I went ahead and actually just highlighted it. So what we talked about a few minutes ago is here. I was going to ask you guys back here, what about this one? Why not? And you guys kind of got it. Notice you had some great fish hooks, on some of these charts, but back here, there was too much risk still from my perspective. The trends were too junior to be taking that trade under the 200 period. Now, actually, you've also heard my friend Paul talk here about the 200 period moving average as well. In fact, what is, Paul mentioned, I think yesterday mentioned Paul, I think you mentioned like 2 up bars through the 20 period moving average. Well, excuse me, you notice that my first one here went ahead and actually had that. This one here, though, doesn't. Everything's sitting below that 200 period moving average. Well, what does that go ahead and mean? There's a risk of a rollover here, isn't there? Okay, so there's too much risk. So even though there were some things that were okay here, everything was too junior back here. And yes, did I miss a move? I did miss a move. I waited, in this example here, of course, I'm waiting, for more confirmation back here. And that's for my real trade that I did on Friday, because these are examples here of what the setups will look like. These are not, trades that I did. Obviously, I did the trade yesterday and I did the trade Friday, in my live account right in front of you guys. But for these examples here, this is would I have missed a real move here? I absolutely would have, but also I would have missed the rollover opportunity as well. So, I focus very heavily here on risk mitigation and capital preservation, and so I'm showing you the ones that look okay, but things that you have to think about. In this case, what you have to think about is that resistance. If you're getting your setup and you're right at resistance, and you're bound and determined to take that trade, then you want to consider factors like, the size of your trade. How many contracts are you really going to want to put into that? How tight are you going to keep your stops on a trade that's riskier like that? So there's going to be some things you're going to want to think about and answer in your risk trading plan now. So like Charlie, for you, who's working on your risk trading plan, and that's something for you to go ahead and keep in mind. Okay, if I'm going to take this trade at resistance levels, this is how I'm going to manage my stops and my size. Okay, and so for any of you that are working on your risk trading plans, you're going to want to keep that in mind. Okay. So this was, just like I said, the same one that I showed, but I wanted to show the danger one as well. Okay. Next example. What do you go ahead and see here, gang? Okay, Peter, let's see, let's get the answers up here. Got different people seeing some different things, and I like that. I like the fact that you guys are answering, because for those of you who are going ahead and answering, you're committing this stuff to memory. So nice work. The too much resistance on the 15. Okay. Nice fish hook on the 15-minute RSI. Okay. Seeing a lot of different answers. Speed lines moving down, 5 minutes. Okay. Let me go ahead and try to bring some clarity to this for you. Okay. The first thing is, by the way, for those of you that are splitting your attention back and forth, I see that we're at 10:34:25, so 34 and a quarter quarters are trading here. So we're kind of getting that big trend here. If you're not long, you're wrong, or you're long until you're wrong today. Has been proven out very well here. So on the 5-minute chart is we do go ahead and have a small setup, but this is very high risk, okay? Because really there's an absence of a real quality in this area here. You did get back above the 200-period moving average. You don't really have a fish hook, but you have the MACD and you have some volume here, okay? This right here, when you have the 15-minute flat, the 30-minute slightly down, and the hourly slightly down, is pretty high risk. And what you need to do then is look at this and say, well, if I'm going to take this trade, where is my resistance? Because with this kind of resistance as far as to the trade itself from a trend perspective, the logic would imply that as soon as we start getting to the next resistance level, which you guys know my resistance level was 99 even to 1,000, okay, that you're going to want to really start looking at taking your profits quickly on that. And sure enough, that's what happened here. In the absence of a solid uptrend, it very quickly found its resistance and started to roll back over. So that's exactly why I wanted to show this trade, because of the absence of any sort of trends really on this. because keep in mind, this is the bar we're talking about here. So you got a flat 15. Here you have basically a flat 30 and a slightly down hourly. With all that there, when you finally do get a little bit of a setup, you get a recommencement here. Don't expect much and look for your next resistance or support level, if you're taking it to the downside, very quickly to want to exit that trade. Okay, so I'm trying to show some things for the more aggressive traders and, the difference between an aggressive and a conservative opportunity there. All right, so keep that in mind. If you're trading these more aggressively and don't have the trends in your favor on the upper ends, the moral is look to take, profits quicker, and that's what I will be doing. Okay, you'll of course do these as you see fit, but that's what you'll notice me doing. So when you see me in a trade where I'm like, well, don't have a lot of that trend here, I'm going to go ahead and lock in this profit quicker here. Okay, I'll move my stop up and let it stop me out. Then you'll have, and then I'll come back to, and I'll remind you of this discussion point. Okay. All right. The next slide here. What do you guys go ahead and see? Now, gang, remember that what we're doing is we're focusing on the bars that I'm showing you here. Remember, see the vertical bars here? We're focusing on the vertical bars. That's the bar that I'm highlighting on each of the time frames. So this bar is the 5-minute, and here's where it was on the 15-minute. Here's where it was on the 30, and here's where it was on the 60. So armed with that information, we're focusing on this bar right here on the 5. There we go. Now we're starting to go ahead and see the answers here. Trend continuation.